Every 4 years, the US gears up for the presidential election, a spectacle of politics, personalities, and promises. But it's more than just campaigning slogans and debates. Each election cycle sparks ripples or even waves in the stock market. For investors, traders, and anyone with a 401k, the question is, what happens when this time comes around? In this video, we're gonna dive into what the upcoming 2024 election could mean for the stock market. We'll look at historical trends, dissect key policies from both Kamala Harris and Donald Trump, and explore how markets respond to the uncertain waters of the election season. Let's start with a broader question. Do US elections actually affect the stock market? Spoiler alert, they do. But maybe not in the way that you'd expect. Historically, markets tend to have mixed results during election years, with performance often stabilizing as the outcome becomes clearer. Typically, we'll see volatility in the months leading up to an election, as investors brace for policy changes and new leadership. But interestingly, the post-election year, whether a new president is elected or the incumbent wins, often shows positive returns, especially if there's a stability in Congress. Election usually stirs up uncertainty, and the market hates uncertainty. As the election season progresses, it's common to see increased volatility. If you think about it, election outcomes can alter taxes, industry regulations, government spending, factors that directly affect companies' earnings and the market's confidence. So, what are the candidates bringing to the table? Let's start with Donald Trump. Trump has built his platform on deregulation, tax cut, and America First trade policies. If re-elected, Trump's approach to economic policy could push for further cuts to corporate taxes, following up on the 2017 Tax Cut and Jobs Act. Tax cuts can boost earnings for corporations, leading to a potential rise in stock prices, especially in industries like tech, energy, and finance. But there's a flip side. Trump's trade policies, especially his approach to China, introduced significant volatility. Tariffs and trade tensions could hurt sectors reliant on global supply chains, like tech and manufacturing. So while lower taxes might appeal to investors, the potential for renewed trade tensions adds a layer of unpredictability. Now, let's look at Kamala Harris. As a former senator and current vice president, Harris has a progressive stance on several economic and social issues, and we can expect her platform to prioritize climate policy, workers' rights, and tech regulation. If elected, Harris may advocate for higher corporate taxes, especially for large corporations, aiming to fund public services and climate initiatives. This could affect corporate profits and subsequently stock prices, especially in the energy, tech, and healthcare sectors. On the other hand, Harris's commitment to clean energy investments could drive growth in renewable energy stocks and the broader green tech sector. Companies focusing on solar, wind, and EV technology might see a boost if federal incentives increase. And this could trigger a sector rotation where capital shifts from traditional energy to renewables. Let's break down how Trump's and Harris's policies could tug at different sectors of the market. Under a Trump win, we might see stronger performance in sectors like traditional energy, finance, and defense, given the preference for deregulation and low taxes. But if Harris takes office, we could see a rally in renewable energy, healthcare, and tech regulation tightening. Here's where it gets interesting. If we have a divided Congress, say Harris wins the presidency but Republicans hold the Senate, we might end up with a gridlock scenario. A gridlock usually means that extreme policy changes are less likely, which investors often interpret as a sign of stability. The market tends to prefer consistency, and gridlock has historically resulted in stable or positive market performance. Election years are like roller coasters for the stock market, and with Trump and Harris in the race, 2024 is no exception. Many investors brace for increased volatility around election time, and for good reason. With debates on taxes, spending, and regulation, both candidates promise substantial change, but in vastly different directions.